If this is the first time on this my YouTube channel, my name is Paul FX, and what did I do on this channel? I share more content on forex trading. I educate people on how to trade the financial market. Okay, and I drop more content on vlog. I document my trade also here. Okay, and I show how my life is and how things have been going, how my growth, consistent growth, how I am growing in the financial market, how I'm going in this industry. Okay, that is what I do on this channel. So if this is the first time, I want you to stay to the end of this video because you're going to be finding this video so very, very helpful. Okay, so now let's dive into this video. So you're welcome once again. So in today's video, is basically for beginners, those who are new into trading. So those who would like to know how to do analysis on the chart. Okay, it's for those who will know how to do analysis on the chart. Now, before you can say you want to know how to create signals by yourself, before you can say you want to start creating signals by yourself, there are things that you need to know first. Now, what are the things you need to know? In short, I'll just first say, before you can analyze the market, you have to know your personality. When I mean you have to know your personality, it means that you have to know the type of person, the type of trader you want to be. For example, we have let me just say we have four categories of traders. We have four categories of traders, which I put them down here. As you can see, I said we have number one is the scalpers. The scalpers. Now, each each forex traders, each categories, these categories of traders, they work on different time frame. When I mean time frame, that is, this time frame means the 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 time they use to hold a trade, the time they use to hold a trade. Okay, all right, so thank you for joining Mr. Joel. Thank you for joining us. Yeah, I can hear you. Thank you for joining us. All right. Yeah. So before you came, I was literally on it. I'm doing a screen record here so I can for the YouTube fan. So today, I think you are an experienced trader, right? All right, that's good. So today we'll just basically be looking at, especially for people that don't really understand how to do analysis, how to create signals by themselves. Okay, so today I'm just going to be taking it as a basic step by step. All right, so today, now the first thing you have to understand as a trader, for you to be able to do analysis by yourself on the forex chart, first thing you have to understand your personality. First thing you have to understand your personality, the type of trader you want to be. You know what we call time frame. You might have heard it before since you have some experience in trading. So when I mean time frame, this deals with the hours or minutes you'll be holding trades. Okay, so you have to know your personality. You have to know the type of person you are. If you are a type of person that can hold a position, a trade for 1 minute or an hour or 4 hour, even for a day or a month. Okay, so, and I said we have the type of traders are categorized into four, like what I have here. The type of traders are categorized into four. First, we have the scalper. Okay, second, we have the day trader. Third, we have the swing trader, and the fourth one we have the position traders. So now these traders that I just mentioned, they work on different time frame. So before you can say you want to know how to do analysis on the chart, you first need to understand the time frame in which different type of traders, the categories of traders they work on. Now, as a scalper work on a lower time frame. What do the scalper do? The scalper, they work on a lower time frame, like what I have here. I said they use the 1 minute time frame to like 5 minutes time frame. Now let us see what a scalper is. Now they said a scalper, they what do they do? I think the network is, yeah, good. So the scalpers, they look for a quick trade opportunity. So they work on the 1 minute time frame, the 5 minute time frame. Okay, so their goal, a scalper goal, is for them to just look for an opportunity. Now, you might have heard what we call pips. A scalper, a scalper goal might be for him to just risk like 10 pips to make 20 pips. Okay, that is, they just want to look for a short opportunity in the market. Now, these people, these scalpers, they don't hold trades for longs. They don't hold trades for long. They don't hold it for an hour. They don't hold it long. Now they just look for an short opportunity for the from the 1 minute time frame to the 15 minute time frame or to the 5 minute time frame. Those are scalpers, short opportunity. Now let us go to a day trader. Now, as a day trader, as the name is, day trader, what we do is that we only come to the financial market, we come to the forex market to look at an opportunity. If there is an opportunity on that day, and as a day trader, we work on the 15 minute time frame, 1 hour time frame. We also work on the 4 hour time frame. Okay, as a day trader. So now, basically, before you can say you want to understand how to do analysis by yourself, you have to make sure you have three time frames. As a trader, you have to have three time frames. Number one, you have to make sure you have the bigger time frame. The bigger time frame is the use of bigger time frame. It helps you to know the direction of the trend. Can you hear me? So the bigger time frames helps you to understand the direction of the trend. If the trend is bullish, or if the trend is bearish. Now, the second time frame will be the time frame that you will use to spot your zones. You will understand this when we go to the practical, when we go to the live chart. So the 15 minute time frame, or the second time frame, which will be used to spot zones like the support and resistance zones, or it can even be a trend line, to draw a trend line. Okay, and the third time frame will be used as an entry. The third time frame, as for a day trader, it can be a 15 minute time frame, it can be a 5 minute time frame, even a 1 minute time frame. Okay, so now let us, before times goes on, they said here, a day trader, they opens and close trade within the same day trade. So this day trader, they don't hold trade 24 hours. Like today is what? Today is Tuesday. So as a day trader, like I did, all my trade, I took all my trade. I am currently not on any position now. Currently speaking, I'm currently not on any position. I have closed all my trades. Because what? Because I am a day trader. I don't take trade overnight. Okay, so all the day trader, what they do is that they catch intraday move. And now, as a this type of trader we're looking at, their risk appetite is different from each other. As a scalper, the risk a scalper trader will be taking will be different from the risk a day trader will be taking. The risk a day trader will be taking will be different from the risk the swing trader will be taking. And the risk a swing trader will be taking will be different from the risk a position trader will be taking. That is the reason why you have to know your personality. You have to know your risk appetite before you can say, this I want to be a scalper. Okay, so now let us move to the next, which is the swing trader. Who are the swing traders? Basically, I used to say the swing trader are basically for, let me just say, the people that, okay, you want to say something? All right, so the swing trader is basically for the people that they don't really have time to be checking on their chart. They don't really have time to be on the screen of their chart. Like people that work 9 to 5 day job. Okay, people that are lawyers, that are doctors, all they just do, they find that they spot an opportunity in the market. Once they see an opportunity, they enter the trade. They set their take profit. They set their stop loss. So they just these swing traders, they can hold trade for so long, for several days. They can hold trade for 2 days, 3 days. even for a week, because they are swing traders. So these swing traders, they work on the higher time frame. Don't forget, I said before you can know how to analyze as a trader, every categories of trader that I listed here, they work with three time frame. And I said the first time frame they work with is the higher time frame, and that higher time frame is used to know the direction of the trend, if the trend is bullish or if the trend is bearish. Okay. And the second time frame will be the one that it will be used to spot a support zone or a resistance zone, or to spot a trend line, to draw a trend line. Okay. So and the third time frame will be used for entry. The third time frame will be used for entry. It can be the 5 minute time frame, it can be the 15 minute time frame, or 1 minute time frame. Do you get that? All right. So the swing trader, like I said, they all trade for several days to week, and they work on the 4 hour time frame, daily time frame, even the weekly time frame. Okay. So don't be convinced with what I put, the time frame I put here. So they work on the daily time frame, they work on the weekly time frame, even on the monthly time frame at times. Okay. So now let us go to the positions trader as we have here. This position trader, these people, they are investors. These people are investors. Like if you want to invest on stock, if you want to invest in forex, if you want to invest on crypto, so these people, they all trade for so long. It can be for monthly, it can even be for a year. So these people, they are big players. When we meet stock traders or position trader, they are big players in the market. So all they do is they invest. When they put their money, they've done their whatever they want to do, their analysis, that okay, this asset I want to invest on, it is going to be profitable. Then when they invest their money onto it, they hold their trade for a year, a month, they hold their trade for weeks, and they cash out from there, they make their money from there. Okay, that is if trade goes in their favor, if what they predicted go in their favor. All right, so do you get that? All right, good. So I don't want to waste our time. I don't want to waste your time too. So I don't know if you have any question. Okay. Yes. It is a swing trader. What they do is now a swing trader. What they do is that these people, these swing traders, they can hold trades for a week. They can hold trades even more than a day. They can hold trade 3 days, 2 days. They can still be on a position, and their trades will continue to be running in profit or in losses, on drawdown rather. So these people, they can hold trade for months, they can hold trade for a week, they can hold trade for 2 to 3 days. Those one are swing traders. Because why is it like that? Because they work on the higher time frame. The more higher time frame you use, that is the more hours your trade is going to spend on running. If you are using a 4 hour time frame, and you take your trade on the lower time frame, 5 minute time frame, and you set your take profit, you use the 4 hour time frame to set your take profit. you know before the trade can hit take profit, it will take long. Because what? Because you are using the 4 hour time frame. Okay, because you start your analysis from the 4 hour time frame. That is how it is. So same way as a scalper, if you use the 5 minute time frame, it means that whatever you want to do, it will be quick. It means that within 10 to 5 minutes, you should see your result. Is either you eat take profit, or you eat stop loss. Do you understand that? All right. So now I want us to move to the all right. So I want us to move to the next one. Now the second thing. Okay, good. Yeah, I can hear you. I can hear you. All right. So now the second thing is you have to understand the second thing now. If you want to know how to do analysis, if you want to know how to generate signals, by yourself. You have to understand market structure, which is very 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 important. Now we have three type of market structure, which I will not waste time on. So we have the first thing, we have the uptrend, which is also known as the bullish market. The uptrend, which is also known as the bullish market. Now when something is bullish, it means that that thing is buying. When I say GBP USD is an uptrend, is in an uptrend, it means that GBP USD is buying. Or when I say GBP USD is in bullish trend, or is in bull is on a bullish market, it means that GBP USD is buying. Okay. Now, how do we identify how do we identify how do we identify an uptrend? If you notice, they said in an uptrend, price makes higher high and higher lows. Price makes higher highs and higher low. It means that the buyers, they are the one in control of this market. Now, how do we identify it? Let me draw a diagram. This is an example of a bullish trend and or an uptrend. They create higher high. Now let us create our higher low. This is our higher low. Then price will go up to create another higher high. Price will break out of this high. You know, this is a high, so price will break out of it and create higher high. Then it will come back down to create another higher low and go back up to break out of this high and create another higher high and come back to the downside and create another higher low and go back up. So this one is an example of an uptrend. What did they do? It creates, this is the higher high, this is the higher low, this is the higher high, and this is the higher low. So it means that price is on a bullish trend, or price is an uptrend. So this one will help us to identify if this is, so it means, this means price is an uptrend. Okay, so now let us move to a downtrend. A downtrend, which means bearish market. When I mean a downtrend means something is selling. Downtrend or bearish market means something is selling. That is, sellers are the one in control of that market. Where something is in downtrend, it means sellers are in controls of that market. Now, what if you want to identify, yeah, I can hear you. Can you hear me? Okay. So if you want to identify a downtrend or a bearish trend, what do? They create lower high and lower low, as it is written here. On a downtrend, they create lower high and a lower low. It means the sellers are in control of that market. For example, this is an example of a downtrend. They create lower, okay, let's just say this is the low, then lower high, this is the lower high, lower low, it will break out of this low, lower low, then create another lower high right here, then another lower low, then another lower high, then another lower low. All right, so this is an example. This is an example of a downtrend. A downtrend, they create lower high. This is a lower low. This point is a lower low, and this is the lower high. This is the lower low. This is the lower high. This is the lower low, and this is the lower high. So means that it is selling. When something is selling, it means that that thing is going down, and when something is buying, it means that that thing is going up. Okay. So now let us move to the last one, the last market structure we have. No problem. All right. So now let us move to the sideways. This the last market structure we have. Now the last market structure we have, it is known as the consolidating market. It is called consolidating market or a ranging market. Consolidating market or a ranging market. But before I draw the diagram of that market, before I draw the diagram of that chart, what does this a sideways trend means? This means that, okay, the sideways range, which means the sideways trend, which means ranging or consolidating market. It means that price move between support and resistance without a clear trend. That is, price is not moving in bullish trend. It is not moving in bullish trend. It is not moving in bearish trend. Price is between. Price is between. That is, price is not making decision. Price is not making decision either to go up or either to go down. So in this sideways trend, we cannot identify if it is buyer or seller that are the one in charge of the market. So we can't know if they are the one in charge of the market. In an uptrend, we identify, we know that it is the buyer, the people that are in demand, they are the one in the market. And on the downtrend, the people that are in charge of controlling the bearish market are the sellers, right? But on the sideways trend on the sideways trend, price is moving between. That is, there is indecision made. We don't know who will win. It's just like having 50-50%, 50% buyer, 50% seller. That is what sideways trend means. That is, it is between. Okay, it is equal. All right, so now let me just draw. Now, as it is, they said market structure is simply reading price swing, highs and low, to know if buyers or seller are stronger. I will explain this. I will ex- yeah. So let me just draw the how the diagram used to be. So, but first, we have to draw what we mean by a zone. They call it our resistance zone and support zone. First, this one is our resistance zone. Let us draw our second zone. And this one here will be our support zone. The down one is the support zone. Even this thing I'm drawing currently is a strategy on itself. So you can actually make a lot of money with support and resistance. You can make a lot of money with support and resistance. So now this is how it works. On a ranging market or consolidating market, price move up and come back to the low. Price move up to the high again and come back to the low, to the same low, move to the high, move to the low. So price will continue doing the same thing on the same zone, on the support and resistance zone. So this is an example of a ranging market. This is an example of a ranging market. That is, there is indecision in the market. Now, in this market, there is no winner yet. We don't know who is winning, but we have equal percentage of people that are buying and people that are selling. That is a simple way I can explain that you understand. That is, there is just 50-50% of buyers and sellers in the market. Okay, so now if price is like this, if market is like this, it means it is in sideways trend or consolidating market. Can you still hear me? Okay. All right. So it means it is a consolidating market or a ranging market. I don't know if you have any question on the three things I've just explained. All right. So now each You know, now this, I said we have three type of market structure. We have three type of market structure. Number one, I said we have the uptrend. Number two, we have the downtrend. And number three, we have ranging the ranging trend, or the sideways trend, or consolidating market. Okay, now as a forex trader, if you want to trade this type of market condition, like we call them market condition. Now, if you want to trade this, we have different approaches. When I mean different approaches, it means we have different concepts or strategy that we can use on different market structure. I hope you're getting that. Now, if you notice this, we have a support, we have a resistance here on the ranging market. Now, the concept that is mostly used on a ranging market, the concept that is mostly used on a ranging market or a sideways market, it is what we call support and resistance. Support and resistance strategy really works. You can actually make a lot of money from it. Even you can grow a small dollar account to a bigger money with just support and resistance. Only if you can spot a ranging market, a sideways market. Okay. So now, in this ranging market, okay, no, I mean the mostly you can really make a lot of money with support and resistance, because they mostly work on ranging markets. And also, you can spot a support and resistance on uptrend and downtrend. you know I will explain more on that as we move on, because I want you to understand that a support can turn to a resistance can turn to a support. Do you get that? You understand more better clearly. All right. So now, each market condition have concept. Each market condition have concept or strategy to enter trades. Each market condition has strategy to enter trades. So I have explained a ranging market, what is mostly used. So on a uptrend, on a bullish market, what we mostly use. Okay, can you hear me? You wanted to say something, right? Yeah, I can hear you. It seems like you have a question. Yeah, what's the question? Do you have a question? Okay, okay. Now, on a this is an uptrend I want to draw currently. This is an example of an uptrend. An uptrend move in higher high, higher low, and they break out. They break out another, create another higher high, higher low, and and retest, pull back again to this, pull back to this rate, to pull back to that high, and go like that. So the type of concepts that is used on an uptrend. Now we have different type of concepts, different type of concept that we can use to take entries on uptrend and downtrend. Number one, we have what we call the trend line. Number one, we have the trend line. Number two, we have the Fibonacci retracement. The Fibonacci retracement. And number three, we have breakout breakout and retest, which I called support and resistance. And we have channels. We also have channels. We call them channels, but we might not talk about that today. We might talk about that later. So that is why, if you're watching this video currently, I want you to hit the subscription button. If you can get more things on this video, I want you to hit the subscription button. I want you to like this video. And if this is your first time watching us, I want you to hit the like button and share this video to friends or relatives. Okay. All right. So now the type of concept, the type of things that can work, that really works on an up downtrend. We have number one is the trend line. Number two is the Fibonacci retracement. Number three is the breakout and retest, which is the support and resistance. Okay. And the number four of it is channel. We call them channels. Okay. But we won't dive into. Okay. Okay. I can hear you clearly. I said on the uptrend and downtrend, we have different concepts that works on uptrend and downtrend. Now, what did I mean by concept? When I mean concept is just like, you creating an idea way of taking entries, idea way of making sure that when price get to something, you will know that this is the decision I am going to take. That is what concept really is. Okay. Now, the first concept is trend line. The second concept is Fibonacci retracement. The third concept is the breakout and retest. Seems like the network is not back yet. So we will soon end our meeting. All right, the network is not back yet, so I'm just waiting for the network to be back. The network is not back yet. Just hoping for the network to be back very, very, very soon. All right. Still loading, still loading, still loading, still loading, still loading, still loading. All right. So I think the network is back now. Yeah, the network is back now. The network is back now. The network is back now. All right. So if you really find this video so very far, I want you to hit the subscription button and like this video, and I want you to the share to friends. If you really gain one or two from this video, from this channel, I draw more of educational content on how to trade the financial market. I draw more of content on vlogs, on how I document trades and how I take my weekly trades. So if it is something that you'll be interested to watch, I want you to subscribe, turn on your notification bell so that you'll be able to be notified whenever I drop videos. You'll be the first to be notified whenever I drop videos. Okay, so that is it, guys. So we're going to be ending this video right here because of because of the network issue, and we just ended our class. We just ended our class now, so we're just gonna be ending it right here. So on then our next class, we're gonna be talking more on how to take trades, the trend lines, Fibonacci retracement, and breakout and support resistance. And we're going to be talking about more on time frame. How we're going to be using the live chart to take trade. Okay, so I just want you guys to stay tuned, join us. If you really like to learn forex trading, you can more join us more and more. Okay. Oh my god. All right, so it ended. It ended not quite long, and again, the network issue just currently just obstructs everything. So two more people just joining. Two more people just joining. Mr. Chris and Corey, Miss Corey or Mr. Corey. All right, so before Mr. Chris came, we've been talking about market structure. But since you are not here on time, you're not here on time, I will drop. I'm already creating a video, okay? I'm going to post this on my YouTube channel, so you can just go back and watch it on the YouTube channel because I've explained more, many more before you guys came online. All right, so and I cannot go back again. So I've gone so long. So you can just I will drop a link to my YouTube channel. I'm going to be uploading it to the YouTube channel after this class. So I'm just going to be finishing this up. Okay. So I was talking about I was talking about that the trend line when we mean the uptrend or downtrend. Now each market structure has different approaches. When I mean approaches, that is the way you the way you take trade, the way you do your analysis on them, the way you find entry to enter trades. That is what I mean by approaches. Now, like I said, we have different approaches here on a for a downtrend and for an uptrend and a downtrend. We have different approaches we can use or different concepts that we can use for them. We have first is the trend line, second is the Fibonacci retracement, and third is the breakout and retest or support and resistance, and the fourth one is the channels. Okay, so first here I'm going to put it like this. We'll be ending this class soon. We'll be ending this class soon, so I'll be able to edit on one or two things and share the videos to the group. I just want to, because of you, I just want to explain this quickly. I should have ended this because of you. Okay, so now you were asking something about support and resistance. Now we can also use support and resistance on the uptrend and the downtrend. Okay, support and resistance is not only used on the ranging market or consolidating market. It can also be used on a uptrend or a downtrend. Now, for example, on this market structure, this is an uptrend. This is an uptrend. As you can see that price came down. Now, as this zone is, this zone we're currently looking at is our resistance. What did price did? Price breakout. Price breakout from it, and price came back to retest. Now, as price came back to retest, it has turned to our support zone. It has turned to our support zone. Now it means that this high, this high will be our resistance, will be where our resistance will be, and this low will be our support. So are you getting me? Okay, so same thing here, same thing here. On this high here, okay, I mean on the support and resistance, the support and resistance, on the support and resistance, what did they do? On the ranging market, they just move on swing highs and low, swing highs and low. When I mean swing high and low, this is what I mean by swing highs and low. Let me just do something. Okay, okay. So this, for example, this one here, I said an uptrend move in higher high, higher low, higher high, higher low, higher high, higher low, and created another higher high, then move back again, move to the downside and create another higher low. That is how an uptrend move. Now, this one here, this point that I'm pointing at is where our high is the high, and this one is the low. Okay, this one is the low, and this one here is the high, and this one here is the low. Now, don't forget, if it was a ranging market, a ranging market will move up to the highs, and it will come back to move back again to the high and come back to the low, move up again to the high and come back to the low. So this is an example of, this one is a ranging market. Now, where will our resistance be? Will our resistance be at the top or the downside? Where is it going to be, our resistance? Oh, we ended the class right here. All right, so that is it, guys. That is it. So we ended the class right here, and okay, so like I was explaining, so we just ended our class right here. So we're gonna move on for you better understanding. Now you have to understand this. You have to understand support and resistance very, 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 very well. Now, don't don't forget that I said a resistance is always at the top. A resistance is always at the high, you know, and a support will always be at the low. This is the low, the bottom. A resistance will always be at the top, which is the high, and the support will always be at the downside, the low, which is the bottom. Okay, never forget that. Now, what is this? This is a high. What is this? This is a low. Now, you see something. This low is an example of support. This high is an example of resistance. Okay, is an example of resistance. Now, because this, because price, what did price did? Price move up. E break out of this high. Price break out of this high and retest. What is this one now? This one you currently hear, it has changed to a low. And I said our support used to be at the low side, at the low level. Now, it means that this is the support. And I said our resistance always be at the top, which is the resistance. Our resistance will always be at the high, will always be at the high. Where is the high? This is the high. Okay, now in this, now for example, what will be here? Is it a support or resistance that will be here? This is a high, this is the top. What will be here? Is this a support or resistance that will be there? Now that's it, is a question for you. You can just go to the comment section and type it. What will be there? Is it a support that will be there or a resistance? What will be there? So now the answer is a resistance will be here. Because what? Because it is the high we have. Because it is the high that we have. That is it. Can you see that? This is the resistance. Now, what will price do? Price will now come back. If price should come back here, then it will turn to a support, then go back up. I hope you get that. Price came back, then turns to a support. Because of what? Because it has created another low. If price create another low, it means that it is no more this one, it is no more a resistant anymore. It has changed from a resistant to a support. You understand that? That is, a resistant can a resistant can change to support in an uptrend. A resistant, they do change to from resistance to support, and opposite to the downtrend. So that is, a support on a downtrend can change to a resistance. Yeah, if I'm right with that. So that is it. So we'll move on to the next class. So I'm currently going to be dropping another content like this week. I just want you to make sure you subscribe. I've been saying subscribe, subscribe, subscribe. So it really means a lot to me if really hit the subscription button. So thank you again for watching this video. I really appreciate spending your time watching this video. So catch you guys on the next class that I'm going to be dropping very soon. Okay, bye bye. Peace out, guys.